What's going on, guys? Bexio back, and today we got a brand new video on Jerome Powell crashing the stock market with his interest rate talks, the Federal Reserve talks, all these things going on, as well as oil's effects on the markets, everything just kind of pumping uncertainty and so many things going in different directions. The volatility is off the charts that the market just seems pretty confused at this point. But before we jump into all that, if you're not subscribed, make sure to smash that sub button because we're on the road to 1,000 subscribers. But we can look at Jerome Powell talking. He talked in front of the House the other day and is talking in front of the Senate currently. And that is about, the impact of Ukraine, the interest rates, the inflation, everything going on, kind of what his plans are. I think they have a meeting on the 15th, and that's expected where they're going to announce the rate hike, and it should be a 0.25% rate hike increase. So as long as it's not worse than that, should be what the market's expecting. So we already know his stance on this, kind of saying that he still sees interest rate hikes ahead, though he noted implications for the U.S. economy are highly uncertain from Ukraine war. Energy prices are skyrocketing. The price of oil is going crazy. It was up a lot yesterday. Now it's coming down some. Super volatile. Pretty weird to see in like a commodities market, but I guess it happens sometimes. He also talks about the labor market being extremely tight, and obviously inflation is well above 2%. And then the plan going forward for the Federal Reserve, according to Powell, is that they're going to have a series of 0.25% point increases coming, but he left the possibility of moving more aggressively should inflation persist. This can be a problem because obviously if oil is skyrocketing in price and energy is about to get way more expensive, that's going to push inflation up. So that adds more uncertainty. Just as we were getting rid of some uncertainty, unloading it, making the stock market a little bit more efficient, people getting more comfortable, we get uncertainty launched right back from Powell. He's just doing what he always does. But then we don't know if they're going to stick to this 0.25% increase, or maybe they switch it up and inflation comes in even hotter and goes even higher, and then they start to go up 0.5% increases and start to, say they're going to happen more often or something like that. So it just can't be predicted on what the Fed's actually going to do. That's the major problem of uncertainty here now. And even if we look at oil prices, substantially down. It was 115 yesterday was a price of oil, down to 107, almost 108, and hopefully this trend continues and we see that it keeps going down. You see kind of this inflection point here starting to come down. Hopefully it actually continues to come down, and the only thing we can really hope for is that oil companies start to produce more. Usually on oil, when we see these big run-ups to peaks, it's always swings the other way. So we have a huge run-up in price of people not producing enough oil and all of these things. And once the price is so high, we overproduce oil and it plummets down the price. And then we go again and it peaks up again. The price goes higher. We overproduce oil. And it's just kind of this cycle of oil that always happens. So hopefully we're seeing more of a spike here and trying to get it to come down to overproduce oil and stuff. So I do think that's something that people are taking into account right now with U.S. oil companies, is trying to flood the market with oil, not only to make them more money, but to control the oil price and not give Russia a ton of power and economic power over the oil price. With Jerome Powell, he's talking about the U.S. economy, saying the implications are highly uncertain and we will be monitoring the situation closely. So, even the peoples whose job it is to know what's going to happen, they don't know what's going to happen. So it just leaves open the door for uncertainty. No one knows what the Fed's going to do. They never tell us what they're going to do. They just say, this is what we plan to do, but we can do whatever we want. So we'll see how they go. It'll be a meeting by meeting basis, basically all year 2022, seeing if the Fed sticks to 0.25% increases or goes to 0.5% increase or even higher than that. But I don't think they can really go too high because they can't push up the interest rates that much. And talks about the policy making, saying making appropriate monetary policy in this environment requires a recognition that the economy evolves in unexpected ways. We will need to be nimble in responding to incoming data and evolving outlooks. They definitely do, because the Fed does not want stagflation to happen, which would be the worst thing for the Fed in general. So they would have failed in both ways of preventing inflation or controlling inflation, and then making economic growth and everything still happen. They would have failed in both ways if we get stagflation and the economy starts to downtrend. So they would have been wrong on both ends. And seeing if they can actually do this, it's going to take a lot more than, trying to manage just the interest rates. That's just one part of it. They have a pretty difficult job to try and manage everything, but this is the uncertainty hitting the markets when people are going to be reacting to what Jerome Powell is saying, what the Fed meetings do all year, and that's what we're going to have to pay attention to. So when the stock market's going up, then we're getting either what we expected or a little bit better than expected. But if it reacts down, then obviously we're going to be getting stuff that wasn't priced in. And obviously, like we said, he yet again saying that the increments of a 0.25% increase is the plan, but would be open to more aggressive moves if inflation gets worse. So we got to take what Jerome Powell says with a little bit of a grain of salt, because there are other members of the Federal Reserve that can come in and say, being more hawkish, they can have much more of a increased interest rates now, be more aggressive, we have to control inflation. There are members like that, but then Jerome Powell, who has a little bit more power than them, is more of the guy who sit back and kind of watch what's playing out, and believes that inflation is going to start going down when supply chain things clear up. But the stock markets, in reaction to everything going on, is down. So you see Dow Jones down just a little bit less than 0.3%. The S&P down a little over the 0.5%. The NASDAQ down over 1.5%. And even the Russell 2K, which a lot of people thought was bottoming, thought that, it is already bottomed. It has gone down so much. It was in bear market territory first, down another 1.29%, the second worst in here. The VIX actually also sitting at 30.48, about the same where we were yesterday, really, after, the peak, and it started to settle down a little bit. We're around where it was before. But you really want the VIX to be around 10 to 20 is like normal ranges. With these spikes is when there's lots of uncertainty, lots of volatility, lots of moves down. So just pay attention to the VIX, trying to see if it gets down to the 20s and then underneath 20, and the 10 to 20 range is where we really want it. And even the Treasury bond. So this is on a downtrend. We zoom in here. We can see, it moved down, it had a bump up, but continues to move down a little bit here, kind of showing people are getting a little adverse to risk. They don't want to go take risk. There's more demand for the bonds. So when the bond price is going down, there's more demand for it. When it's going up, there's less demand for it. So we're seeing investors turn to bonds a little bit here, more kind of safe haven investing going on, trying to find less risk. And we're seeing that with bonds going down here. We saw it with gold had its day, but I mean, nobody really wants gold, so it's going down. Bitcoin even had its period of time, and we might be seeing a shift from Bitcoin being a risk-on asset to becoming a risk-off one, which would be great for the price of Bitcoin, because it basically get the best of both worlds. It would be able to thrive in an environment where there's not a lot of appetite for risk, and also thrive in one where there is a lot of appetite for risk. But we just got Jerome Powell doing what Jerome Powell does: add uncertainty into the market. He's been doing it for a lot of time. The Fed's meetings have been kind of, this is the plan to do something, but we can do something much, much more aggressive if we feel we need to. So they kind of make sure both options are available and that they're saying they're available. And it just adds more and more uncertainty, because people don't really know which one they're going to go with. The past of the Fed, they said inflation was transitory, that was going to be fine, and they were ultimately wrong. So if they're saying they're going with 0.25% increases, everything will be fine. What if they're wrong? But that's going to do it for this video. As always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers. And I'll see you guys in my next video.